American stocks edged higher after a slew of corporate releases from corporations in the US. Tesla climbed more than 10% in extended trading after the company announced a renewed push into more affordable electric vehicle models. Visa and Texas Instruments jumped more than 2% and 6% respectively, also on the back of stronger than expected reports, all that underscoring a solid earnings season so far. The S&P 500 and the tech-heavy Nasdaq Composite continued recovering from their recent losing streaks. The blue-chip Dow closed the session more than 260 points higher, or nearly 0.7%, while the S&P 500 and the Nasdaq each gained more than 1%. Let's now bring in the Chief Market Analyst at Scope Markets, Naeem Aslam. He is Zay Capital Markets Chief Investment Officer, and he joins us now live from London. Great to be with you, Naeem. So we've heard, for now, a solid earnings season in the US. We do know that inflation is stickier in the US for now than it is in Europe. What's the outlook for the US economy right now?
Sure. Thanks for having me, as always. We all know that market is very much addicted to dovish monetary policy stance, to loose monetary policy, and inflation is the key ingredient which will determine which way the Federal Reserve will move. For now, as you correctly pointed out, yes, the inflation is more sticky in the United States in comparison to the rest of the regions, especially when you compare that to the EU. So this represents a huge headache and a problem for the Federal Reserve, because for the Federal Reserve, they look at the labor market, they look at the inflation data, they want to reduce rates, but they cannot because they have no excuse. This particular week, I mean, we've been looking at the GDP data from the United States as well, and if that number also produces or paints a better or a more optimistic picture for the US economy, the Federal Reserve will have even less option or less excuses to say, you know what, we can reduce interest rate, which would impact everything in relation to the markets. So I think for now, yes, sticky is the word, and perhaps stubborn would be more appropriate when it comes to inflation.
Right. And well, if, as you say, markets and investors are addicted to dovish monetary policies, but the Fed doesn't really have much room right now to bring down those interest rates, when do you think they will be able to start? And what's the Fed's trajectory, in your opinion?
Yes, sure. If you look at the mortgage market, if you look at the fixed income market, if you look at the treasury market, that has actually started to price in higher rates once again, which is in the really the sort of a news. If you want to see, or you want to hear, if you are a mortgage owner, or if you are on the other side of the trade in the fixed income market, because market was expecting at least 4 interest rate cut from the Federal Reserve. But however, I think there are a few important things. Look, the number of cuts the Federal Reserve will announce or they will do this year doesn't really matter. It's the magnitude, it's the size of the interest rate which matters the most. So the Federal Reserve may actually do 1 or may actually do 2. But if each interest rate is in the size of a 50 basis point or 100 basis point, then that means that we don't really need those 4 interest rate cuts or 4 events of a 25 basis interest rate cut. So I think that would very much determine, because Federal Reserve will come under pressure once the ECB and other central banks will begin the process of cutting the interest rate, which could be as soon as just in a couple of months.
Right. What would a potential Trump victory mean for corporations in the US, for their earnings, but also for how those corporates will fare on the stock markets? Because I do remember it being there as some sort of a rally when Trump won years ago in the US.
Yeah, if you remember and recall, we did discuss this on a higher level with yourselves on a previous show with you. Look, I think it is still a little bit early to go and start talking about those particular factors. But as an investor, you should position yourself in these particular times ahead of those particular major events which will unfold. But I think Trump victory from us. Not that we support any of his policies, but if we look at Biden, he hasn't done that great for the U.S. economy as well. So I think you just have to pick, okay, from the out of the two, who would you support, or who could be better for the U.S. economy? So I think Trump certainly has merits in relation to that, and market will like that, because one thing that he has already started to dub to his audience is that he wants to cut taxes for the middlemen as well, which is the sector which has been impacted most because of a higher inflation. So if you are touching the beat that everyone wants to hear, obviously there will be a positive sentiment. There are more greater chances for him to win.
So potentially good for markets. And Naeem Aslan, thank you very much for your analysis.
Thanks for having me.